Tom Lee, a name that's become synonymous with bullish takes on Wall Street, just sounded an alarm investors can't ignore. After making several spot-on calls over the past 18 months, he's now predicting a rocky few weeks for the stock market. But what makes this forecast especially intriguing is his belief that, while the road ahead will be bumpy, we're still on track for a strong finish by year's end. If you're in the market, his message is clear: don't get spooked by the noise. Lee points to a harsh start to September, down 4% in the first week alone, as an example of how things could get dicey. Historically, September to November has been a challenging period, often marked by heightened volatility and seasonal dips. But unlike previous years where economic fundamentals were shaky, Lee argues there's no substantial reason for this decline. It's mostly driven by fear, not by real economic problems. The panic in the market is, in his view, psychological rather than structural. On CNBC and his private research site, Lee's urging investors not to be swayed by the media's doom and gloom spin cycle. Despite what will likely feel like a roller coaster of uncertainty and volatility, he's convinced 2024 will end on a high note. He's even called out a potential bottom for the market at around 5,300, a bold statement few analysts are willing to make. This period may scare some into selling, but for others, it could be an ideal time to buy or hold, depending on your risk tolerance. Another key factor for Lee is the job market. While July numbers raised concerns about a possible hard landing, the August jobs data painted a more optimistic picture. Unemployment actually fell, and job growth improved, easing fears of an impending downturn. This suggests the Federal Reserve may successfully engineer a soft landing, balancing rate cuts to avoid a full-blown recession. For Lee, the Fed's language in upcoming rate cuts will be critical. How they frame their decisions could either reassure or unsettle the market. It's not just about whether they cut by 25 or 50 basis points, it's about the tone they set for the economic outlook. When it comes to tech stocks, particularly Nvidia, Lee highlights a crucial insight. Despite strong earnings, Nvidia's stock took a hit, which he attributes to overcrowding in the trade. It's not that Nvidia is a bad investment, but when everyone's betting on the same horse, there's bound to be a pullback. Lee even suggests that we might see Nvidia dip into the $90 range in the short term, but for those with a long-term perspective, this could be a golden opportunity. He believes Nvidia's dominance in AI infrastructure will ensure its growth, making any short-term drop a potential gift for patient investors. So, what's the takeaway? According to Lee, the best course of action over the next 8 weeks is to stay grounded. If the market follows his predictions and reaches a low, this could be the moment to accumulate stocks at a discount. If he's wrong and the bounce happens sooner, adjust your strategy accordingly. Whether you're holding or buying the dip, his advice is to stay calm and avoid getting swept up in the short-term panic. Lee's message is a straightforward reminder that successful investing isn't about chasing every trend, it's about playing the long game.